appreciate that.
Yeah.
That meant a lot to me right there. Let's talk about income
Yes.
and passive, active. I mean,
Yes.
what are the different types of income? How does this work with business or other kinds of
Yes.
investments? What do we need to know here?
Yeah, that's a big thing. But especially in a business like the laundromat business, the idea always comes up whether it's considered a passive business or an active business. That's a question I probably get asked more than anything else I get asked questions about, whether it be with real estate or a business. And the answer is when the IRS, they understand they have just special rules they use. It doesn't really matter how much you think it's involved. Like I know people that work with the real estate all the time, and the IRS still considers that passive. And they're like, how is that passive? I worked it all the time. It's just the way the IRS works. So when it comes to passive and active, typically the drawn sand in the line is 500 hours a year. That's the number, right? If I would do more than 500 hours a year, then I'm what they call materially participating in that business, and it would be considered an active business, right? It's not passive. If it's less than that, then there's some other rules I can maybe get into that, but typically the 500-hour rule makes a difference. Now, why does it make a difference? Why do we care? The answer is this, and I always use a visual because it's just easy to explain. Is you think about income and on your tax return, or you consider it in three separate baskets, right? There's an active basket. That's where your W-2 would go. That would be earnings from businesses which you're actively involved in. That's an active participation basket. There's a portfolio basket, which is interest, dividends, capital gains from sale of stocks and bonds. That's portfolio. And then there's the passive basket, which would be rent income, royalty income, business in which you're not actively involved. That's considered passive. Now, those are the three buckets or baskets that we have. The IRS will allow you to offset gains and losses in any one basket, right? So if I have a passive investment that has a gain and a passive investment that has a loss, I can offset the two of those. What I can't do is take a loss from my passive basket. So let's say I add up all my income and loss in my passive basket, and it's an overall net loss. I can't take that net loss and offset it against my W-2 and my active income. Can't do that. The IRS considers that a passive loss, and it gets what they call suspended, which means it just gets carried forward into the next year. You don't lose it. It's not gone. You just go, hey, I'm going to go to zero, and then the leftover losses that I can't take get carried over into the next year. Maybe I can use them the next year.